I'm Mrs. Uniac. I know I can advisor at Whetstone. I just wanted to take a bit of time today to talk about financial aid award letters. So anytime between now and within the next couple of months, you should be receiving an award letter from the schools that you applied to, as long as you filled out the FAFSA. If you haven't filled out the FAFSA yet, that's a whole other conversation, and I'm more than happy to work one-on-one with you about that. But so I just wanted to show you a couple of examples of award letters that students have provided me in the past to show you how different they can look, how to figure out what the important information on that award letter is, and then how to really decipher what is the bottom line cost of that university or college after all the aid that you receive. So, in my opinion, some award letters can be a bit deceiving or a little bit tricky to read. So I just kind of want to show you how I decipher award letters and then how I create kind of breakdown cost sheets for students too, so that you might be able to do that in your own time. Ms. Brodegam and the counselors are reading the chat and hopefully answering questions there if there are any. And feel free to, post any questions that you have along the way. It's not a huge group, so we can certainly be pretty informal and ask questions along the way. Okay, so I'm actually gonna stop my video just so it shows the full screen. Perfect. So I thought there we go. I thought we'd first start with just doing a couple of definitions. That way we all are on the same knowledge base about what the different types of aid I'm going to be reviewing are today. The first are scholarships. I think most people are pretty familiar with what this means, but a lot of scholarships are automatically awarded based on your application to that college. And these are, usually based on merit or other unique characteristics that you may have, or some other information that you submitted in your application that prompted the college to give you that scholarship. This is money that doesn't need to be paid back. So you'll see the term gift aid used when reviewing these letters, and that also includes the next two sections as well. Do note though that when you do receive a scholarship, sometimes they do have certain requirements for you, like to maintain a GPA. I know for one of my big scholarships in college, I had to keep a 3.0. So do your homework and make sure you know what those requirements are. Grants are money that is money that's awarded on need. So that would be based on the result of your FAFSA, depending on, if you met Pell eligibility. Based on the FAFSA, which is the grant that the federal government gives you. Sometimes even if you don't meet the federal threshold for receiving grants, sometimes the state or the school will still provide you grants based on your need. I know, for example, Ohio State has a grant that's meant for students who don't quite meet that Pell eligibility, but still do have demonstrated needs. So once again, this is money that does not need to be paid back, and it's not merit-based, so there aren't going to be any GPA requirements for these. Lastly, you'll see too in one of these award letters that work study sometimes is factored into the award letter. However, you can use this money to be applied towards your bill, but at the end of the day, having a work study position is mostly like having a job. That paycheck goes straight to you. So while some people may use it in determining what your out-of-pocket expenses are for your bill, I tend to tell students not to count this towards their bill, because the likelihood of a student actually having a work study job on campus and then using their paycheck to pay off their tuition is usually pretty slim. But we can talk more about that once we get there as well. So there are lots of different types of loans that could be in itself its own presentation, and I'm not legally allowed to really give advice on loans, but I certainly can advise you and talk to you about the different types. So the big ones that you'll get from the government are subsidized and unsubsidized Stafford loans. So the appeal to these is that the interest rates are a lot lower than private loans, and the repayment doesn't happen until 6 months after you graduate. So that's really great. Subsidized are the most ideal if you have to take out any money, because the government pays the interest while you're in school. So if you take out $2,000 when you graduate, that loan is still only $2,000. However, unsubsidized, that does accrue interest while you're in school. So if you take out $2,000, it's going to be, $2,300 or whatever it is once you graduate. Certain parents will be qualified to take out a Parent Plus loan. which are also federally sponsored, and they are lower interest rates as well than a private loan. But then there are a lot of really great private loan companies out there that are specific to the education sector, as well as a lot of people take out from credit unions that have pretty competitive loan rates as well. So there are a lot of different types of loans, and it is really typical for a student to have to take out a loan. This is, it's an interesting time in our lives because I think this generation is pretty adverse to trying to take on any debt, which is great. I think more now than ever, this generation is really like keen to wanting to leave school with as little debt as possible. And sometimes students will say, I don't want to go to school if I don't have to take out a loan. I'm a firm believer in a little bit is okay, and it's an investment in your future. And it's an investment that's going to allow you to have potentially, you know, depending on what you're majoring in, a higher rate of income once you do graduate. So we know that statistics show that with an associate's degree, you're going to make an average of a additional $400,000 in your lifetime. And with a bachelor's degree, you'll earn $1 million more than you would if you had a high school degree in your lifetime. So truly it is an investment in your future. And I always tell folks that, you know, it's okay to take out a loan as long as you finish the degree. Where it becomes problematic for most students is when they start to take on this debt, don't finish the degree, and then they're left owing $30,000, but don't have the degree to earn that higher income to pay it off. So certainly if you are looking at taking out loans and you want to talk more in a one-on-one, I would love to do that with you. But you will see that some loans are included in these aid packages that we reviewed today. Okay, so going on to our first aid letter. This is an example from a student, and I actually quite like this letter. I think it's broken down pretty well. One thing that appeals to me at first is that it highlights right at the top the total cost of college per year. So, you know, with room and board, fees, charges, and tuition, this school costs $64,060 per year. So what we're now aiming to do is figure out, okay, how can we get that number as close to zero as possible? Now, the first thing that this school outlines is total grants and scholarships. So that's that gift aid, that money that does not need to be paid back. You can see here that this student got a couple of grants and a scholarship, a nice big scholarship that took a giant chunk of that tuition off. You'll also see that most often schools are breaking it down per semester as well. Now, most of the time you're going to see pretty similar amounts per semester, but I like that this school also does a total. So you can just really look at this total column and you can see that this student has received $49,645 in gift aid that does not need to be paid back. At that point, you take the 64,000 number, you minus the 49,000 number, and you're left with $14,415. That is the amount that is needed in loans, or you will have to pay out of pocket, which I know not too many people have that kind of money just available for paying out of pocket. So then we start to think about loans or other financing options. So you can see here that this school has offered $5,440 in federal loans. So most students will get $5,500. This one actually takes the origination fees out, which is why it's a bit lower. I don't know. That's usually you'll see from most financial aid award letters that the student is offered $5,500 in federal Stafford loans. So that is $3,500 in the Stafford. That's the kind we like because that's the kind that does not accrue interest while you're in school, and $2,000 in unsubsidized. So most often you're going to see $5,500 in federal loans. So then what they do is they take the amount that's needed to pay out of pocket, this $14,000, and they take out all the federal loans that you'll be most likely borrowing, and then they leave you with the amount remaining after federal loans, which is $8,975,000. One of the things that this letter also does is that it highlights that the parents can also potentially take out loans. It leaves space for them to kind of do this like remaining worksheet of private loans or student loans. And then it also highlights indirect cost. So sometimes, I think you'll actually see this in another letter, some schools will include books, transportation, and personal expenses in the overall cost of the institution. But I like that this school kind of highlights it at the bottom, so that way you're not thinking that that's another $3,500 in cost that you need to figure out funding for, because those sorts of costs are easily earned in, summer work. So I know a lot of students will get close to full-time jobs over the summer to help put money away for books, personal expenses, stuff like that. A lot of students will choose to get a work-study job on campus or just a regular job on campus and also use that as their book money, their spending money, etc. So at this point, I'm just going to take a brief break before I move on to the next slide to see Ms. Brodegum. Do we have any questions that we should be answering before we move on to the next slide?
Nothing in the chat. And I might have missed it, but one question I know that comes up a lot is, why isn't my IKIC grant on here, or why isn't my PTA scholarship on here? And I just
that's a great question. Yeah. So this is that's a really excellent question, Ms. Brodegum. So this is the initial award letter that comes from the school before you get any private scholarships. So like, for example, this student actually did end up receiving the I Know I Can Dream Big scholarship, which was $3,500. And that generally isn't awarded until like March, April, sometime in there. Actually, the grant, I don't think you get awarded until May. So any of those kind of private scholarships, some private scholarships will actually write you a check. Sometimes they don't even send it to the college. So really, I know that there are a lot of like $500, $1,000 scholarships out there where if you win it, they just send you a check and you deposit it and use it as you need for college. So for example, like the I Know I Can scholarships, if you do receive one of those, I Know I Can is actually going to ask you for a bit more information, like a class schedule for the fall to guarantee that you did enroll and you are signed up for classes. And then what will happen is once we receive the necessary information for that scholarship, we send the money directly to the university. So that will come off your final bill that's due to pay right before school starts. So that's actually kind of one of the interesting things about this, is that really these bills aren't actually due or paid until right before the semester begins. So there is plenty of time for that to show up. And that's an excellent point. Just make sure that if you do receive any funding from I Know I Can, that you're reading your student email, which we say all the time, because those sorts of like, hey, we need your class schedule, or hey, we need your final financial aid award letter, those sorts of requests will come to your email. So just make sure you're checking that. But yeah, any of those private scholarships that you get, they'll either come directly to you or they'll be paid to your college at a later date before your bill is due. Great question.
Yep. And then one last thing I wanted to mention, we do have quite a few scholarships that have upcoming deadlines, and there are 3 really big ones that we want to make sure as many students apply for as possible, which is the Columbus Foundation. Is it I Know I Can Dream Big that's coming up?
It is. Actually, I think I put some in the classroom the other day that are also on the Naviance list. I think there are about 5 that are due on March 1st right now. Mm-hmm. And some of them have different requirements. Some are based on financial needs, some are based on other demographics, but do make sure that you're reading that list because there's at least something for everybody in that March 1st deadline pool.
Yeah, and I know Ms. Fiasconari this year, she's been updating that scholarship list. She took that on this year. And so everything that comes across our email of scholarship opportunities, that's going directly into Naviance, and the district is updating it at their level as well. So Naviance is a really great resource for checking local scholarships.
That Naviance list, honestly, I think in my opinion is usually the most thorough. I think it gets updated the most frequently, and it's really good about having all those local scholarships listed. Okay, so this is the second letter we're gonna review today. We are gonna review 3. So this one's Capital University. You can see that at the top of the letter. It's also I think this one's a pretty decent aid package too. You can see there that they outline room and board costs, tuition, activity fees, wellness fees, technology fees. You're gonna see those types of fees at like every university. So right there, they outline the total cost of college per year. You can once again see that they break this down between gift aid, which is the scholarships and grants, and then self-help aid, otherwise known as loans, which is kind of funny that they call it self-help aid, but that's fine. So You can see here that the total gift aid the student received is $30,195. That does not need to be paid back. One thing that I would like to also mention at this point. So with this particular student who submitted this, you can see that this aid package was based on them living on campus. So this happens to a lot of students who apply to local schools. They'll say, you know, if I get enough money to Capital, I'll want to live on campus, but if not, I'll want to live off campus. So sometimes you'll see like housing grants or other like housing specific grants or scholarships. So if you get an aid package and you say, okay, well, this isn't enough money for me to want to live on campus, what you'll need to do at that point is contact your admissions counselor and say, I'd like for my financial aid package to be repackaged as a commuter student. And you may see that some of the scholarships will dip based on that. Usually not the merit ones like these presidential scholarships and such. But sometimes some of these awards are, you know, living on campus specific. So you may see a dip in scholarship money, but hopefully not too much. So just note that. So I know that that happened for this student. They were like, well, let me see if I get enough money to live on campus. They were still not comfortable taking out the $10,000 a year. So then they had the college repackage their financial aid to be a commuter student. So it's still a really good package in my opinion, especially for Capital. So this student ended up having $30,195 in gift aid out of the total cost. So you can see here too, like they outlined it, but they didn't necessarily give you until this bottom section what the actual like estimated billed charges were. So then they, in the self-help aid, this is where I kind of mentioned earlier, it can sometimes get tricky. They included the work study money as money that the student would be using to pay their bill, which in my opinion just doesn't happen very often. You know, some students decide that they have too heavy of a workload and they don't have the time to take on this work study position, or they find a work study position that doesn't offer them enough hours to earn up to that $2,000. So in my personal opinion, it's kind of risky to depend on work study money to be used to pay off your bill. I would much rather see students kind of financially plan to have their costs covered outside of that work study money, or, you know, with loans or whatever it is, and then use that work study money for living expenses. So you can see here that their total gift aid was $30,195. They were offered the $5,500 in federal Stafford loans. And so they estimated that the $30,000 plus the $5,500 in loans plus the $2,000 in work study would leave this student paying about $2,600 out of pocket. Well, that included the work study and it included the federal loans. So in actuality, you'll see here at the bottom, if you take the gift aid and you subtract that from how much it would totally live to live on campus, she would need to pay $10,103 out of pocket. Yeah, so they can get a little confusing to read, and that's why we're doing this here today. And one of the things that I've already started doing with some students too is that I have a Google Voice number, and some students will like either email me pictures of their aid letter or text me pictures of their aid letter, and then we'll go over in a Zoom session quite like this. It's also important to note for those of you that are here that your school counselors do need copies of all acceptance letters, scholarships, and financial aid award letters. They do keep track of this information. So if they have it, they're always more than happy to share it with me as well so that I can help you decipher your out-of-pocket costs. So
and some students do ask us why we ask for that. And one is so that way, like when we go to like graduation and we're asking what your plans are after school, we already have your verification information on file. And then also we just keep track of how much scholarship money our students are being offered, whether it's for a 4-year total or 2-year total.
Yes, very important stuff. Before I jump into this disaster of an award letter, I do want to note one thing. So for those of you that haven't received your award letters yet, or once you filled out your FAFSA, sometimes next to the expected family contribution number, you'll have like a little asterisk. That means that you have been selected for what's called verification. And what verification means is that usually the school needs just a bit more information from you to be able to package your financial aid. And usually it consists of a copy of the parent's taxes. So if you filled out the FAFSA and were not able to use the IRS retrieval tool to have your tax return directly imported into the FAFSA, oftentimes schools are going to ask to see a copy of the parent's tax return. Sometimes they'll have you also fill out a worksheet to verify some information. I will tell you, in my opinion, for the college process, the verification is the most tricky and most difficult piece of the whole equation. So it's something that I would love to help your students walk through if you were selected for that, or help, assist in filling out any paperwork. So do keep an eye, read your email, check your student portals as well, because sometimes those requests come through there. But it's important to complete these verification processes, because schools will not award you a financial aid package until you complete the verification paperwork. So it's a lot. It's a lot to do, but the sooner we get it done, the sooner you get a financial aid award letter, which ultimately helps you choose your college, because then you know which colleges are the cheapest. I will also say one of the things I've started helping some students do is financial aid appeals. So, especially this last year with COVID, a lot of families' financial situations changed and income was lost. So one of the things that you can do once you receive a financial aid award letter is appeal that decision based on special circumstances. One of the most common being a change in income. So if you were one of those people who, lost their job or had, divorce or health issues, those are some of the considerations that schools take into factors. So if any of those apply to you, just let me know and I'll help you work through that appeals process as well. So this is Ohio University. Love them, great school. Our students really love OU. Their award letters, first of all, you access them in your student portal. They don't just send you the letter. So you do have to seek it out and find it on your own. And they don't necessarily do a great job, of like outlining everything for you. They don't tell you how much the cost of the college is. They don't, there's a lot of missing information in my opinion. But this student actually had already applied for a Sallie Mae loan. That's why you see that show up on this award letter. Do note that this, if this is your student receiving their first letter, it wouldn't necessarily have this Sallie Mae line at the bottom of this letter. It's only because that student had already applied for and selected OU as the recipient of her Sallie Mae loan. So what you can see here at the top, I wrote down the cost of college per year for OU. After room and board, it's $27,842. So you can see that this student received $9,195 in grant aid. So that's the Pathway Award, the Pell Grant, and the OCOG, which is the Ohio College Opportunity Grant. You can also see here that student was offered work study, but since they don't actually break down your out-of-pocket costs, they didn't put that in, any totals for you or anything like that. They were offered $5,500 in federal loans, like everyone was. And you can see that between the $5,500 in loans, the gift money, and then the $12,787 in Sallie Mae loans, that student would be taking out $18,287 a year to attend Ohio University, which is a lot of loans because, if you're thinking about 4 years of that, you're going to be looking at close to $80,000 in loans once you graduate. So that is pretty high. But that's also, family decisions, whether or not you take out that much in loans as well. So once again, it's different for every family, every student is different, and what is reasonable to take out, what's reasonable to pay out of pocket. And that's something that certainly I think is best done being talked out, in a one-on-one conversation. So you can see here, this is what I do. So when students say that was the same student that got all three of those letters, which it wasn't, it was all three different students, but what I would do at that point, say a student sends me those three letters and says, hey, Mrs. Uniac, here are the three financial aid award letters. I don't know how to read these. I don't know where to go to school. Like, tell me what to do. I use this exact breakdown and I list everything out for each student, telling them how much they'd have to take out on loans, or the out-of-pocket is the loans minus the federal subsidized loans. So truly, when you're looking at these letters, it's the total amount in loans you want to be thinking of, because even though it's nice that you get those federal loans and it's a lower interest rate, it's still money that you have to pay back at the end of the day. So truly, when you get down to it, be looking at what that bottom line number is. And, you know, 10,000, if you look at this, you're like, okay, capital's the best, 10,000. That still doesn't include any of the other, you know, like Ms. Brodegum said, I Know I Can scholarships that you might receive, or Ohio PTA or Kiwanis, or any of these other, you know, local scholarships that you might be applying for. But it's a nice baseline to know, like, okay, I owe $10,000. Let's see how close I can get that to zero. So to take the loan or not to take the loan, I kind of mentioned this at the beginning. I truly feel that loans are a good investment if you promise to yourself that you're going to finish the program. If you feel hesitant, you know, there are certainly other pathways that you can do to reduce your student debt, such as, you know, going to a Columbus State first. But it's gonna differ per student. I think some students really could benefit from going away to a four-year school and having their sole focus be on college. And then some students really do succeed and thrive doing Columbus State first. It truly is different for every student. And that's why I would never make a blanket statement to say, don't take the loan or do take the loan. So here's the student loan simulator on the Student Gov website, the FAFSA website is pretty good. It helps you put in basically what payments would be once you graduate. So that's kind of helpful to know, like, okay, how much could I really, so if you think you're going to be a teacher and this is what potentially your salary would be at the end, you know, could I actually afford that loan payment? I always talk to students about how much I took out in loans and then how much my monthly payments are and how I spread them out to be more affordable once I graduated. So I'm always more than happy to have those conversations with students as well. And with that, do
you mind if I add one thing to that?
That's all I got for today. So yeah, let's keep, what questions should we talk about now?
Well, so one thing I just wanted to add is that, you know, if you're torn between, you know, two colleges, and I think some students just like automatically will go for the smallest, you know, out of pocket or smallest loan number. But I would just caution you about doing that if you are picking a school that might not be a good fit for you. So having a college that's a really, really good fit for you, that will help you get, help you move forward in your career, that you know that you will be successful, that has the tools that you need, it might be worth investing a little bit more in that college where you are more likely to succeed and graduate on time, rather than, you know, taking out smaller loans or not taking out loans and then kind of burning out at a college that wasn't a good fit for you to begin with.
1,000,000%. Same thing with major too. So like if you are like, well, this school has the exact program that I really want, but this one's cheaper and maybe I wouldn't really be doing what I want, it's better to spend a little bit more money upfront to be at the best school for you. But it's hard. I mean, I think our generation and some other generations, you know, they were really encouraged to take out as many loans as needed. And then, you know, I'm still paying college loans. My husband's still paying college loans. Like, I feel it. It can feel burdensome, but it's also a really good investment in the future if it's done correctly. So, but it's different for every student. So more than happy to talk offline, you know, with anybody about their individual situations, because it's a lot to think about. It's a lot to consider. Cool. I haven't been looking at the chat. Does anybody have any questions about those slides? Have anybody, so you said verification. Yeah, Julian. If anybody has any specific questions about verification, happy to answer it. I also posted a really great fact sheet about the verification process on the Whetstone I Know I Can Instagram too, if anybody is interested in kind of looking at that too, if you think you had been selected. So awesome. Anybody else have any other questions? I know that was only about a half an hour, but hopefully it is a lot to consider. Yes, Taylor, you're right. It's a lot. So in my personal opinion, just, you know, walking through individually can kind of be the best steps. So, but I appreciate everyone that came today. Any other questions? Other general advice? Work on scholarships. Like if you're not in class, work on scholarships. I mean, there are a lot of scholarships that a lot of students, that's a good question, Julian. There are a lot of scholarships that don't get many applicants because students are hesitant to write essays or put in the time for the application. So your chances go up the more you apply for. And get your FAFSA done if you haven't gotten your FAFSA done. That's the easiest way to, you know, have a doorway to get more money for school.
Yeah, definitely set aside time every week to be applying for scholarships. There's so much money out there and so much money gets left behind because people aren't applying. If you look at it this way, like what, it takes you 2 hours max to fill out some of these applications, especially if you already have your Common App essay done and you already have letters of rec on file with teachers. So like even if it's a $500 scholarship, that's what, $250 an hour? That's pretty good.
So we've also had some students be successful in the past with negotiating with colleges as well. So this works well if you've applied to colleges that are similar in cost and similar in structure. So like say you have 2 private colleges that cost about the same, that have about the same type of tuition, but say you got really good financial aid at one and not so great at the other. It's okay to call a financial aid office and say, hey, college A gave me this really great financial aid package, but you're my, you know, I really want to go to college B. If I provide you my award letter from college A, can you get me closer to that? And a lot of times financial aid offices are willing to find a little bit more money. Colleges are hurting for students right now, so they really want to do what they can to get students in the door. So negotiating is okay. Even if you don't have that jumping point to say like, oh, I don't have another college with a comparable aid package to try to barter with, you can still call a financial aid office and say, you know, my name is Beth. I'm really interested in attending in the fall. I'm still about 5,000 short from where I need to be able to attend. Is there
I'm going to go ahead and stop the recording now and we'll wait for Miss Uniac to pop back in.